Hello and welcome to our podcast, What's the Plan? I'm your host, Shravani, and today we'll be discussing an investment vehicle that's been increasingly popular all over the world, exchange traded funds or ETFs. We'll also be talking about a few smarter strategies that we can develop with the help of ETFs to grow your wealth. To unravel this, I'm joined with our founder and CEO, Mr. Vishal Dhawan. Hi, Vishal.
Hi, Shannon. Nice to be here again.
Yes, thank you. So, I recently came across a study, Vishal, that talked about how the AUM of ETFs have grown almost 5.5 times in last 5 years. And according to AMFI data as well, just in this 1 year till July 2025, we've seen almost 38 ETFs launched newly. So that's an incredible pace. So could you take us through the journey of how this actually began?
Yeah, I think it's a great, shift that has happened in investment behavior and investor behavior in terms of building blocks for portfolios. So typically, what we're seeing is traditionally investors, if you go back to the 90s, tended to buy direct stock if they wanted to participate in equity markets. Mutual funds were just starting to find their way through the ecosystem. And I think for many people who uh, are probably older than you are, Shavani, uh, a lot of them would have participated or heard of friends who lost a lot of money during the Harshad Mehta scam, uh, in 1992. And at that time, all the buying was happening in direct equity. ETFs coincidentally got launched in 2002, but there was very little demand for ETFs per se till 2030, when actually the regulation, actually not even 2013, it was 2015, when regulations actually came in and allowed the EPFO, the Employee Provident Fund Office, to actually invest in ETFs. And all of a sudden, a portion of that money which you put away towards your retirement savings started to find its way into ETFs. And inversely, because it's a vehicle that invests very often at that time into equity markets as well. And if you look at the data now, just the ETFO manages about 24.75 lakh crores of money in retirement pools as of end March 24. So part of that money is obviously finding its way into equity markets through ETFs. This shift, though, has not been only EPF and ETFO money. There has actually been much more shifts happening world over in terms of how investors are looking at ETFs as an investment vehicle, in addition to stocks, in addition to mutual funds, etc. And if you look at some of the numbers, you'd find that a number of retail folios in the last 5 years, for example, has gone up more than 10 or 11 times in terms of ETF participation. You've also seen the amount of money being managed as a part of the total AUM go up from about 7% to 12% of the entire AUM. And you're also seeing that the AUM amounts, which used to be about 5,200, 5,300 crores, have now become 17,800 crores. So there's a big shift that is happening in investor behavior, where they're now starting to look at ETFs as a very, very serious part of investing. This is following in the lines of what has happened in the West. So in the US, for example, there are more than 4,000 ETFs which are available. And therefore, deciding which ETF that you want to buy has itself become a huge task and a huge job for investors to make decisions.
Right, right. So not only India, then globally as well, ETFs are seeing a lot of popularity. So what would be the cause behind this popularity that we are seeing in ETFs recently?
So I think a few things. One is, of course, equity markets have themselves done very well. When equity markets do well, you automatically see money flow into the asset class that has done well. And a lot of the characteristics of ETFs and ETFs give investors the feeling that they own a stock. For example, you buy it and sell it just like a stock on the stock exchange. The price that normally it's traded at could reflect very close to the current market value rather than a mutual fund where you normally get the closing price of that day if you're either buying or selling. And you also end up seeing that there's a lot more ETF types also having got created. And what ends up happening is that some of it is obviously, core index funds. So the Nifty 50, for example, is the most popular index that a lot of investors track. But you've seen a lot of ETFs getting created on other indices as well. So whether it's a Nifty 500, whether it's a mid cap index, whether it's a small cap index, you're now starting to see ETFs there. And you've also seen products come in like smart beta products, which again are mathematically based models where they pick certain factors. For example, you could have something which is tracking momentum as a factor, or you could have something tracking quality as a factor. You could have something tracking value investments of a factor. So essentially, there are mathematical models on the back of which ETFs are created, and those become investment vehicles as well. Now, in addition to equity, you've also seen a lot of popularity of commodity ETFs in India. Most commonly, the gold ETF, and more recently, the silver ETF. Both of them have become very popular vehicles for investors to look at. And we should not forget that there are also bond ETFs available, which allow you to buy bonds, which traditionally have been very illiquid assets. But typically, what happens is when you build it out into an ETF, then you can buy and sell the ETF whenever you need the money, other than having to sell the bond, which may not be liquid. So domestically, there are all of these options. And then, of course, as investors become more aware that their own financial goals can sometimes be international, they could end up having education to children to support internationally, or they may be traveling, on vacations. They want to have certain parts of their money lying in non-rupee assets, and they therefore look at investing overseas. And you have ETFs based on the S&P 500, which is the US markets. You have ETFs based on the MSCI World, which is the world index covering all developed markets. You could see Europe, Japan, China, other emerging markets. So there's a whole range of options available as well. And therefore, I think as that range has become larger, suddenly investors have started to feel that, there is an ETF for a lot of my needs that I have. And therefore, I want to look at this category a little more closely than I wanted in the past.
Right. So a wide menu to choose from then. So for an investor who's looking to build an ETF portfolio, what should he look at, or how should he build his portfolio given the wide universe that you just described to us?
So I think the starting point for all investors needs to be their own financial goals and their investment time horizon. Because I think one of the mistakes that investors can do is follow trends of where the money is flowing and start to put their money there, which is not normally a great idea, because at the end of the day, the money flows into a particular category or a particular type of ETF may be driven by many other factors. For example, if the number of EPF investors are increasing in the country, automatically the money going into index ETF on the equity markets may go up because of the fact that the EPFO is putting more money. So we need to be mindful that just the flows of money into a particular category should not drive your decision on where to invest. Ideally, the way to think about this is you start off with the end objectives you have. So typically, let's say if you're planning for retirement and your retirement is many years away, you do want to ensure that a part of your money is going to equities. And when a part of your money is going to equities, you could decide saying, I want to put a portion on that to actively managed mutual funds, which can potentially outperform benchmarks that ETFs work with. A part of that money could go to index ETFs. A part of that money could end up going to direct equity. A part of that money could end up going to third-party portfolio managers who could manage your money for you. So therefore, because your financial goal of retirement is far away and you want to be able to beat inflation to get there, you will look at equity as an asset class and therefore look at an ETF as a underlying instrument or a vehicle to take exposure to that asset class. In the same way, if let's say you have concerns that you have around how risk across the world has gone up. You may decide that I want a part of my asset exposure to be in both as an asset class, in which case a gold ETF could come into your portfolio. You could find that I have shorter term needs of money for which I want to use bonds. Or there could be situations where I definitely have goals which are international and I want a part of that money to be held internationally because I want to be able to benefit from the exposure that I get to global markets as well as to protect currency risk. So the starting point to your ETF strategy has to actually come from your financial goals and your investment time horizon. You then map that with your risk appetite because if you're a risk averse investor, going to an equity ETF may not be the right choice for you because equities, by their inherent nature, whether you go through an ETF or through any other maker, are going to be volatile. They want to go up and down. There will be times when they will get hit very hard because of news flow. So you need to keep that in mind while you are making that decisions. The other thing that you want to keep in mind, besides these three items, is are you building a fundamentally robust and sound portfolio? Because what can happen sometimes with ETFs is that they can sound very exciting and very cool because there may be certain things that are happening in that place which make it very attractive. Say, for example, if there's a new hot theme like AI, there could be an ETF that could get created on AI. And you could end up in a situation where you end up buying that ETF because you want to participate in stocks which are going to benefit from AI. Now, as long as it's a long-term, robust trend that is getting created, I think you're fine. But if it ends up in a situation where you end up having a short-term trend which suddenly then goes away, you end up having a portfolio then which you might feel really silly about a few years from now.
Yeah.
Another example of this is crypto. And you've seen now ETFs getting created on cryptocurrencies globally as well. And there is a gray zone in India on whether you're allowed to buy those ETFs or not as well. But if you choose to make that decision, you need to go back to understanding how does crypto work, why is it appropriate in a portfolio, etc., rather than just buying it because it is an ETF on an exciting theme. So our suggestion to investors is how you approach your portfolio construction should not end up changing just because you have an ETF vehicle. The fundamental process of portfolio construction needs to be built around your financial goals, built around your investment time horizon and your risk profile.
Right, understood. So that provides like a guide for investors on how to actually build the portfolio. So could you just list down, given that you've already told us about the advantages of ETFs, list down some of the few portions that investors should pay attention at, or some drawbacks that we don't commonly see around about ETFs and the portfolio building part? What are those points that one should look at?
So I think the most important thing is to keep in mind that ETFs have to be bought and sold in the stock market, unlike a mutual fund, which gets bought and sold from the mutual fund directly if it's an open-ended mutual fund. Now, the limitation of a listed asset like an ETF is that there has to be liquidity of that ETF available at the price that you want to buy or sell and for the quantity that you want to buy and sell. And even though there are market makers who exist who can typically come in and support some of that requirement, the ETF market by itself may not be deeply liquid enough across every type of ETF for you to be able to get the benefit of that. And therefore, you do want to look at trading volumes on ETFs very carefully before you allocate money into those vehicles. The other thing that might happen is because it's listed on the stock exchange, there is a risk that you might end up over trading on a ETF, especially because an ETF by its very nature tends to be a lower cost instrument. And therefore, one of the things that investors may miss in the process is that your overall cost of your instrument is the cost of buying and selling as well as the underlying expense of the ETF itself. Now, if you buy and sell too much, you end up increasing your cost of buying and selling, and therefore the benefit that you had of having a lower expense ratio might actually go away just simply because you're overtrading your portfolio. And we do find that ETFs could have tracking errors as well, which means that the performance of the underlying index may be different from the performance of the ETFs. And while traditionally we would say that, as long as it outperforms the index, I'm okay. That's not a good way to look at ETFs because they should be tracking the index very closely, either in excess performance or a lower than normal performance. Both of them contribute to tracking errors. And therefore, you need to be careful as an investor that you don't get caught into an ETF instrument where the tracking error is very high. And some of this could also be driven by liquidity, or it could get driven by scarcity. Because we saw recently when it was difficult to invest internationally, some of the international ETFs listed in Indian markets were quoting at huge premiums to their NAVs, which was abnormal and that needs to give way at some point.
Yes, right. So that brings me to the end of my conversation. What we discussed was about the advantages as well as disadvantages of ETFs. So, main standpoints were that ETFs are now not only viewed as an alternate for mutual funds, but they are new, smarter, versatile strategies for investors to build wealth. If so, for the investors listening to us, if you are looking at a cost efficient or a transparent way, a future ready way to invest, ETFs might be a way to begin your journey. So, as usual, as we tell you all, do your search first, stay disciplined, and invest according to your financial plan. That's it for today's episode. Thank you, Ishan. Thank you so much for this insightful conversation. If you enjoyed this episode and took something out of it, please do subscribe to our channel, like the video, and share it with your friends and family. Thank you.
Thank you.
Disclaimers. Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BUSL and certification from National Institute of Securities Markets, NISM, in no way guarantee performance of the intermediary or provide any assurance of returns to investors. The information is only for consumption by the client and such material should not be redistributed. The securities quoted are for illustration only and are not recommendatory. This material is for information and educational purposes only.